Welcome to Yellow Tunnel. My name is Dr. Rapal. I'm still founder of Yellow Tunnel. Today, I'd like to go over current market conditions, get ready for CPI data tomorrow, and for the start of the earnings season. Delta Airline tomorrow and JP Morgan Friday. For those of you who are new, welcome. This is my brief bio. And the disclosures are very important, right? Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor a CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, let's take a look at the current market condition. Look at the profit accelerator. For this, this is our neural network model, main model that basically provides long signals every day. These are short-term signals. We also have a weekly trader. But profit accelerator is where I actually take these signals and trade them. Some of them I'm holding for longer period of time, some of them are shorter period of time. So today, for Spider's market model predicted 553 to be support, 556 overhead resistance. We are trading 559 after Powell's speech. Expectation that interest rates are going to go down and the economy is still in good shape, soft landing. So we reached 560 going into CPI print tomorrow, right? And still strong uptrend, potentially reaching 575 on the upside. Looking at the Spiders, we see new all-time highs. We reached 560 in terms of positioning. Dealers positioning, a lot of positioning at 570, 575 level on the S&P. Also, interest rates are continuing to deteriorate. 10-year yield continues to deteriorate. It's stable, kind of descending triangle. I would watch the CPI data in the start of the earnings season. If we break below 420, that would be bullish. If we break above this uptrend, that would be bearish. Dollar also pulled back and sitting at the 50-day moving average. So all of that is bullish for the market. One area of concern, Bitcoin is staying below 60,000. So the proxy for risk taking, that would be one area of the concern. And also still narrow participation across most of the stocks. If you look at how many stocks are trading above 20-day moving average, above 50-day moving average, also narrow leadership. So a lot of emphasis on CPI and earnings, a lot of expectations from earnings. From seasonality point of view, usually July is a strong month, and then it kind of tapers off as we're heading into August. I did trade today AMAT. So let's look at the Powell speech today. So tomorrow CPI print, and then earnings season starts Friday and tomorrow, Thursday. Part of the aggressive power trader, part of the profit accelerator, there was AMAT signal. I wanted to have exposure to semiconductors, so I bought it at 252.28. Trimmed the position at 254.05. It's trading at 254.64. So it's about almost 1% profit at this point, and I'm looking for 2% profit on the second half of the position. So this would be an example of how you would trade these signals. You can do orders. If you feel more comfortable trading options, you can do at-the-money options, Delta 70, Delta 80. JP Morgan announcing earnings. Our friends from Bar Chart providing a lot of cool tools. One of them is expected move. JP Morgan announcing earnings on Friday, implied volatility, high IV rank. You can see those weekly options are outpacing the rest of the months. But for Friday, expected move is 369. So almost we've seen 2 standard deviation move last earnings season that was close to 7%. So I think JP Morgan has a lot of expectations, and it could move, I would say 4 to 8%. 4 to 8%. So the way last time we had a pretty sharp pullback, what was that? Almost 8% or 7%. So 1 standard deviation would be 4%, 2 standard deviation would be 8%. The question is, do you want to be long or short volatility at bar chart? We are working at the gamma exposure. I'll have it pretty soon. But for now, we're going to, our friends at Tradier also show gamma exposure. So you have high open interest at 220, high open interest 190, 185, which implies basically 1 2 standard deviation move, right? 2 standard deviation move, at least how people are positioned with high open interest. So we'll see what happens to JP Morgan on Friday. But personally, because there is, it's most of it is the put skew, buying puts, selling calls, I tend to sell. I would go with the iron candle and sell premium out of the money calls, out of the money puts. If you're more conservative like I am, then 2 standard deviation, right? You have high probability of success, low return on capital. If you're more aggressive, you can do one standard deviation move, which would be 369, and then you have high return on capital, but smaller probability of success, judging based on previous earnings. You can find more information about bar chart and yellow tunnel on our Twitter. Search for the word tunnel, yellow tunnel, handle tunnel yellow. Please hit follow, repost our blog videos, and we'll see you on. Actually, we have a strategy roundtable today, and then keep an eye on the blog on Sundays and these short videos on Wednesday. Thank you very much, and have a great day.